So one of my students asked me this question yesterday, that why do we need a confirmation when price finally trades back to our point of interest before we enter the trade? Now, this is a very, very valid question. And if you are able to answer this question correctly, guys, then you will truly be profitable in this market. Those of you who are watching me for the first time, trust me, just give me 5 minutes of your time. And when I finish explaining this, you will love to subscribe and you will love to forever follow me. All right. So let me give you a knowledge that you're supposed to pay for, but then freely. Now look at this chart. All right. I just want to go straight forward to the point. This is BTC USDT. It can be applied to any chart at all. All right. So this is BTC USDT, and then you can use it for indices. You can use it for currencies, anything. Now blending market structure shift and point of interest, because that is the kind of confirmation we need. If you have a lopsided understanding of how to delineate market structure, then you have to go through my videos, and then you're going to have a lot of knowledge understanding that. So look at this. Price has been coming. Price moved up, had a shifting structure here. I'm just doing this so I can show you the progression of price movement. You see, break of structure down here perfectly. Is that not how you trade? Let me bring it closer so you can see it. Now, by the way, this is the role of change of character, what other people call market structure shift and point of interest. How do we treat them? Now, notice what price did. Price had a break of structure downside. We have it right there. Let me correctly put it here. As a smart money trader, or what we call the ICT traders, what you do when you see price have this kind of movement, break of structure to the downside, what you do is to quickly look for your Fibonacci tool, which is this one, this guy. Pick it, put it right here. You see where price started the movement was this guy. This was the highest point. Put it right there and bring it to the last point price traded into, this place. Once you do that, you are now going to look for how price will start coming back into your premium area. There is something called the premium and discount area. And this is simply a business concept. You see, as a businessman, as a businesswoman, or anybody doing business, your goal is to always make profit and to satisfy your customers. All right. So if you have this kind of scenario on your chart, this is representing a product. As a businessman, your goal is to buy at a cheaper price and sell at a higher price. Your profit is lying in between the buying price and the selling price. The difference between your buying price and your selling price becomes your profit. That's basically what your premium and discount is. So you buy at discount and you sell at premium. I hope this is understandable. So imagine you selling at discount. What does that imply? You're going to have a loss, or you're going to have a bad market. You're not going to make profit. All right. So when you are selling at a premium point, you make more profit. So come to think of it. If the smart money are buying, where do you think they are buying? They are buying at discount. How about when they are selling? They are selling at premium. I hope this is understandable. Now, after we've established this concept, the next thing is to now wait. There is an exact location or area where price does the sell. Now, from your premium point, we can see the premium area starts from here. Let's mark this line. Starts from somewhere here upward. So this is where you begin your sell. All right. This is where you begin your sell. But how do you go about selling it? To sell from this point, what you need is a series of what we call institutional reference points. You can have a confluence of them, or you can have single institutional reference points. So as much as possible, what you need to do is to use your mind, to use your eyes to be able to see them. Now, let me remove all the institutional reference point I can see in this premium area. Number one is this fair value gap. What is a fair value gap? A fair value gap is simply an imbalance, an area where price have not fully gotten equal liquidity. So that is why we call them imbalance. So ideally, we want to see price come back to at least half point of that fair value gap. And this is why you saw price touching it at the exact 50% location. All right. So these things are predictable, guys. These things are highly predictable. So this is one institutional reference point, number one. Institutional reference point number two becomes this bearish order block. This guy. That is a bearish order block. Why? Because that was the last buy candle that gave this sell side momentum energy. All right. This becomes a bearish order block. This is the second institutional reference point. Now, if you look closely, a lot of you people don't see this. You have this guy, a breaker block. This guy, a breaker block. I hope you're seeing this, guys. I hope you're seeing this. I don't need to show you one decent chart, very, very perfect chart for you to be able to understand this. I choose to use any chart to show you that these things are possible. These things are possible. Now, as price begins the movement, the goal is to now use the institutional reference points for an entry. But then, am I going to use this fair value gap for entry? Or this breaker block? Or this order block? Don't forget that price uses something called the PD array, premium and discount array. What does that mean? It is simply the sequential arrangement of the 7 institutional reference points in ICT concept. What are they? Let me list them for you. You have, starting from the most important one, is mitigation block. All right. And the second one is a breaker block. All right. And the third one is a liquidity void. All right. So I'll just skip this video and write all of them, then I'll come back. So when you talk about the 7 institutional reference points, these are the 7 institutional reference points, and they are arranged according to their order of importance. Now, this is the reason why when you are taking your trade, you have to start screening it this way. All right. Now, look at this one precisely. This, for example, is a breaker block. Now, in situations where you have a breaker, you will hardly see a mitigation block. All right. So the formation is this pattern. So if I am taking my trade, I will prioritize, first of all, among all these three, this guy. But then when you look closely, this one has already confluenced with the order block. So this area becomes a better area for price to come to. So if price is reacting from this fair value gap, then I will be suspecting a possible inducement. All right, because every time these things are formed, it follows this pattern. So as price is now coming back to my point of interest. So if price is coming back to my point of interest, which is basically this particular one, let me show you that. This confluence I have becomes the most powerful point of interest. The breaker block and the order block that are confluencing with each other, this area becomes a better point of interest, which is known as POI. All right. So this is the most powerful detail you want to see as price comes back. So notice what price have done. This is a sweep of liquidity, and that's how a typical breaker block formation is. It is not as perfect as the sketch may look like. All right, the sketch is basically something like this, and then price coming back. But then you need to always find a way of identifying these things easily. All right, so when you see it from that perspective, that is a bearish breaker. Now here comes the retracement into my point of interest. Remember, the time frame is in the 1 hour time frame, and the shift in market structure I will need to see would have to come in either 15-minute time frame or the 5-minute time frame. And that is where it is important for you to wait for the retracement. As price is retracing, I will patiently wait for it to come back to my point of interest. But how do I monitor it? I'll basically monitor it in the 5-minute or the 15-minute time frame, depending on which one price is actually printing with so much exactitude. Now notice, as price was coming, did you see a shift in market structure here? Price came back, it walked to this area. These are small scalping strategies. All right, you can scalp around here. Price touches this guy, you can scalp around these areas. But if you want to be sustainable, if you want to take the bigger move, you would have to be patient for price to reach the ultimate point of interest. I have scalped a lot before, but if you want to take the big move, you want to wait for price to come to the point of interest. All right, now let's play it out and see. I'm not only playing out this so you can see the playing of this price movement. All right, if I go right there, let me just forward it so you can see that right at the point of interest of price, so you would see what I'm doing. All right, so this is it. Price have traded into our point of interest. Boom, touching the point of interest. Now the question is, should I go ahead and start entering the short directly because I have touched it? It is possible that price will walk in your direction, because as soon as you touch it there, you're going to see an entry. All right, it is very possible that price will work for you. But the risk you will have is that when the buyers are not yet done, price can even push above here and get you stopped out before coming down. That is why you need the confirmation. And that change of character is the ultimate or the last confirmation you need for price to give you an entry. Now notice what I was doing. I was patiently waiting for it. Why do you need the confirmation? So that you will not be deceived. Look at this. Shifted market structure, break of structure, which is what? An uptrend, even though we are downtrend overall. So if this uptrend did not finish, you would have your stop loss at risk. And the only way to identify that this uptrend has finished is when you finally see a shifting structure, and that becomes the entry. I hope you are understanding this in detail. All right, so a lot of questions like this come to me. How do I find the ultimate confirmation? How do I know it? This is the way to know it. All right, this is the only way to know that price have now finally given you an opportunity. So we have touched the point of interest. Remember, this is the confluence. I showed you where the breaker block and the order block are. Confluence is always the most powerful. I hope you understand that. So you see price coming. We have a shifting structure. Price is, you now see what price is doing, misbehaving. Even though we touched it, it's now misbehaving. We have not had any shifting structure, and that becomes so difficult for us. All right, so that is why you need this confirmation. If you are taking it, you need this confirmation. So we are seeing it, it's playing out. Okay, now this is it. This is it. Notice what price did. Break of structure to the upside because we are going up. Now failure swing because price pushed up, came down, retracing into this area, fair value gap here. And then price pushed up again to this area, but then came in crashing, which is what? A typical change of character on the lower time frame. A typical change of character. This is your change of character, guys. Is that not a change of character? What does that tell you? the uptrend that was temporary, the short-time uptrend, is now aligning with the overall downtrend. I hope you're getting it. And if you have been trading ICT concept, where is your entry going to be? Here. You have it here. What do you have? Why do we do this? Because you have a typical confluence between, this is a mitigation block, and a fair value gap. Remember, I told you that confluences are always powerful. Not this other block. Alright? As you trade this, there are situations you will see price actually going here. But it is better you take it from here, so that if price decides to use that area, because this is more powerful than this other block, if it decides to be in this area, you will be in the trade. And even if it comes to the other block, you will still be in the trade, so that you will not miss it. I hope this is understandable. Anyway, so this becomes the entry. This becomes the entry. There are many. I just don't want you to take my words. Go to your chart, confirm these things, and you will see how powerful these things are. All right. Right here, since I have it's not as big as I expect, the fair value gap, I will take it from the tip of this bearish mitigation block, and your stop loss is always here. Now, if you go to your higher time frame, you will realize that your stop loss is even smaller than the one you were supposed to take. So this is the biggest movement. Probably you will target somewhere below here. All right, that is your target as you watch out for these things. These things work across any asset. You don't have to be selective about it. All right. So if you are taking your trade from this area, this is the kind of safest trade you would take. All right. Now look at this. Did price play out correctly? Yes. Price played out correctly. Notice what price did. It came right here, the confluence, right here, the fair value gap, and the bearish mitigation block. That was your entry. Boom. And it gave you the movement. So whenever I do this, it gives me this confidence that price is going to walk in my direction. And then if I am doubting the trade, it will always keep me safe, because this kind of entry don't push you into unnecessary entries. You would have to wait patiently. See what has happened. See what has happened. All right. Notice what price did. Is that not a complete trade you would have taken? That is a complete trade you would have taken. I am not giving you theory. These are the things I do. I do these things time and again. And if you want to end your trade, or if you want to take your profit, how do you do it? Immediately when you see a shifting structure again. Shifting structure, or what we basically call change of character, is powerful. You basically wait for it again to know that price is no longer going lower again. Let's see it. Let's see it. All right. Notice what price did now. Price shifted structure again. That is the change of character. And this is to tell you that price has finished the downward movement. If price wants to end the movement, it starts with a change of character, guys. And then it comes back. Let me quickly show you another one on gold. All right, so I can show you that these things work across any asset you are dealing with in the market. All right. I hope this guy that asked me this question would be able to see this video anyway. I told him that I was making this video. Okay, now look at this. Look at what has happened here. Price had this movement. Let's see it. The bearish movement started. And when we saw this price movement, we don't want to buy here. All right. You don't buy against a moving trend, and you don't sell when price is already in discount. Remember the rule: if you're doing premium and discount, you don't want to buy against a moving trend. You want to see price finish delivering liquidity before you start the buying. So what do? You don't sell in discount. All right. You don't sell in discount. This is discount. You don't sell it here. You only buy here, and you don't buy in premium. So price did this movement, came into, my time is far going, but it came into this. Look at this. Price just touched the point of interest as it was coming down. This was it. It touched here. So if I want to go bullish, because I want to buy in discount to premium, if I want to go bullish, all I need is a shifting structure. Since I have touched the point of interest, it's a shifting structure in the lower time frame. And since I'm looking at it from the 4-hour, I could easily find a shifting structure on the 15-minute time frame. On the 15-minute time frame, now notice what has happened. Price was coming. Did you see any shifting structure? No shifting structure here. No shifting structure here. But this was a shifting structure. And as price was coming back, I have what? A point of interest, a bullish mitigation block right there. All right. Notice what price did. It touched it and it started going up there. So this is just an example to show you what these things are. Shifting structure or a change of character is so powerful. I hope this video helps anyway. I will make another video explaining this. My time is fast spent. I'll have to stop here. Thank you guys. See you another time.